Hello, everyone. Welcome to the InfoVest podcast. My name is Daniel, and today is December 14th, 2020. And we're just going to quickly look at the markets here today. We have seen in the futures market overnight a big gap up in equities. We had the S&P 500, NASDAQ, Russell, and Dow, all of them gapping up. And as we speak, they are making all new highs for the session. And this is mainly on the back of fresh economic stimulus, the confidence coming back in. There were some news that the full $908 billion bill is expected to come on Monday. One of the Democrats mentioned this. And we could expect to hear something about it on Monday. Could be during the day or around 4 or 5 p.m. And so that's why we've seen a big, massive gap up in equities. Now, there was some news released today about the COVID-19 relief package being split into two different type of proposals. So one bill is expected to be $748 billion, which includes money for small business loans, jobless benefits, and vaccine distribution. And the other package includes $160 billion for state and local aid that includes liability protections for businesses and other entities. So the thing is, we were talking about this one bill coming out at once, but now we're talking about the bill being separate in two. So you can see there's still some disagreements on many things, but in overall news, it sounds positive as it shows that there is some sort of progress and agreement coming through, and hope at the end of the tunnel that we could possibly get this COVID relief package by possibly today or by the end of the week. So that gap up on inequities is pretty important, because that gap wasn't filled, and it still continues to remain close to the highs for the day. And so it's very important to monitor that, because if any negative news about the bill not coming out today or this week, we could easily fill that gap. So on the S&P 500, we would say that if any negative news about the stimulus, we could see the gap being filled back to 3657. If not, this can be a big positive note for the day and for the week, and we could continue to see increase in prices as we shoot back up, and as we also approach Christmas next week, we could get that Santa rally that everyone is expecting. So that's kind of few things to monitor. Other than that, we had the dollar also kind of sell off, and the other currencies such as the euro and Canadian dollar and the pound, which I will come to soon and talk about, all gapping up and rallying as well. And basically because of this risk on sentiment. Again, the stimulus bill being pretty positive, so you would sell the dollar, and the other currencies would go up on risk on sentiment. And in addition, also you would have equities rallying and gapping up as well. We also see that over the weekend that the FDA approves Pfizer vaccine for emergency use in U.S. And so the agency said the authorization was a significant milestone in the pandemic, which taken more than 295,000 lives in the U.S. The vaccine offers up to 95% protection against COVID-19, and it was deemed safe and effective by the FDA. So President Donald Trump said the first vaccination will take place in less than 24 hours, so you can see a rollout of that very soon, which is, again, positive news. Other than that, we also heard that the U.S. expects to immunize 100 million people by March of next year. So that's about 1/3 of their population. So again, positive news of the vaccine, positive news of the stimulus, and which is increasing and keeping the bids in equities much higher. And in terms of bonds, because of the inverse correlation with equities, we see that bonds also gap down and continues to go into sell territory as yields increase. So gold, all eyes on gold, and actually all eyes on the Federal Reserve, which this week on Wednesday is going to come out. It's going to be one of the important meetings as they come and they update their guidance and their expectations for the future on the growth of the U.S. And also, they will be, on Wednesday, they'll be able to shine some light on what they plan to do in terms of the QE and their bond buying purchases. So that's something to look forward for on Wednesday. The expectation of Fed is that they would announce some sort of new QE program where they will move kind of the short end bond buying to the long end, and they may start that starting Wednesday. They'll start possibly announcing that. If not, they may announce it or may start doing it, the ongoing bond purchases in the next meeting next year. So there was some kind of survey that was done on the question was, do you expect the FOMC to change the pace of asset purchases before the end of 2021? And 49% said no, 32% said it will decrease, and 19% said it will increase. So there wasn't strong optimism on that Fed will kind of do much in terms of changing the pace of the asset purchases. However, we could see that change in the duration from the short end to the long end be talked about possibly in this coming meeting or maybe in the next meeting. So it's something to keep an eye on, bonds and yields. Any of a hawkish tone could increase yields and kind of push bonds lower, and any of a dovish tone would push yields lower and bond prices higher. So currently right now, what the Fed is doing is they're buying $80 billion a month in treasuries and $40 billion a month in mortgage-backed securities. And that idea is to put pressure on real borrowing costs. So to continue with this, the idea is that this large-scale purchases and suppressing yields might be more effective if you start purchasing more on the long end of the curve. So that's something to watch out for Wednesday, and that will also be key for gold, because any more printing, any more QE, additional QE, any more kind of stimulus from the Fed would help kind of prop up, help kind of push up gold prices higher. If they don't continue another round of easing, And if they sound to be kind of neutral or hawkish, you could see a sell-off in gold. So really, the direction of gold kind of we'll see what the Fed does, and kind of all eyes is on the Fed when it comes to trading gold. And anything further than that, could be either hawkish or dovish, could set the tone and the direction of gold and also even the dollar. So all eyes on that, in addition with also the stimulus bill that is coming out from Congress. So lockdowns in certain areas still continue. Germany mentions that they've had infections that have swelled and that have kind of gotten out of hand, so they continue to lock down hard, especially as Christmas is coming, and they expect that people would be out and doing things. So as seen as in many countries and nations, they want to kind of control the curve and control the virus. So by doing that, they are putting in effective lockdown measures to control that curve until we have a little bit more of a stronger signs of positive news coming out in terms of the infections and the cases that are spreading. The vaccine is coming out, which is positive news, so they want to roll that out as much and try to limit the ability to transfer it from one person to the other. So that continues. In other news, the pound overnight has also gapped up. Big news on UK and EU. The reason it gapped up, so previously, if you listened to my podcast before, I mentioned that the EU and UK set up a deadline that by this weekend, actually by Sunday, they would have something done. But that was not the case. They said that they wanted to go the extra mile and keep continuing the talks and keep continuing negotiations. With less than 3 weeks until December 31st, their deadline, they still have a lot to talk about, especially on their fishing and water territories. And so the pound in the markets, the pound took it positively as if it wasn't an concrete deadline. Sunday wasn't a concrete deadline, and it wasn't an end all kind of thing. So due to that, we had a pop in the pound, and we continue to see the pound rally, kind of a relief rally that, okay, Sunday wasn't the true deadline. and when the true deadline is, we'll find out once the deal goes through. They keep telling us that they'll have it done, but it ends up being pushed out. But that gap in the pound hasn't been filled yet, and we still continue to see the bids being picked up. So something to monitor. If we do get a deal in the next week or two or before December 31st, we could see a really nice relief rally in the pound. Other than that, I do want to mention there's this interesting article about what happens when you get COVID-19 vaccine. So I'm just going to quickly share this. A few things to be aware when getting the Pfizer vaccine. One is the immunity that comes after 28 days and 7 days after the second vaccine. So you're required to take, if you're taking the vaccine, 2 doses of Pfizer vaccine is required for full immunity. So let's say, hypothetically, day 1 is your first vaccine dose. By day 12, you start to build immunity. By day 21 is when you get the second vaccine dose. And by day 28, you get full immunity. So that's kind of the schedule on how the Pfizer vaccine works. There's no evidence that immunization prevents transmission. So life may not be as track or may not be normal as quickly as some may assume. However, they mentioned that it is around 95% effective, and the Pfizer vaccine needs to be kept in minus 70 degrees Celsius. So this is the Pfizer kind of temperatures that the vaccine needs to be stored in. The most severe side effects occur after the second dose, where 3.8% of volunteers had fatigue and 2% had headaches. So to get this vaccine, it looks like it's a full, if you're starting from day one, it's a full 28-day, almost like basically a month kind of progress for an individual who takes this Pfizer vaccine. Something to keep in mind about when it comes to the markets, that yes, we have the vaccine coming out. Yes, it's being rolled out. The pace of it and how it affects and how it kind of controls the spread will be something to watch out for. It could create kind of fear or panic in the markets if anything negative headlines or news that come out about these vaccines, or about Pfizer and about any of these damaging effects that these vaccines do to any individuals. So, you could expect a knee-jerk down in equities if that negative news builds. So something to keep in mind about, something to keep also in mind about the duration and how long it takes. So I thought I would share that. Thought it was something interesting. Other than that, nothing big in terms of the economic data. It's going to be a quiet day. So again, the key focus for the day and for the week are a few things. One is the Fed, the FOMC, Federal Reserve. We also have, I believe, some of UK data coming out in the week. And we'll have to keep an eye on BREXIT, is another thing for the pound. And the biggest thing for equities, as mentioned, is the stimulus bill. Like I said, we've gapped up in equities. It will be important to see, especially during the North American session, if we can continue this upward trend, and if we can continue to rise higher and not fill the gap. It'll be interesting if in the North American session we fill the gap and reverse back up and go back to the highs of the day of the session. Possible, anything can happen. But if things do turn negative for the stimulus, we can for sure expect the gap to be filled, and we can expect that the S&P 500 reach back to the 3657 mark to fill that gap, especially if there's negative news about anything about the stimulus. As I look right now, we are seeing that equities are slowly coming off, but it's still maintaining a bid, and we still haven't filled the gap. So it's very important because this could set the tone coming forward. All right. Hope you guys enjoyed the podcast. Hope you got a lot out of it. Not much for today in terms of trading, in terms of news, other than the big picture macro news. And I hope you will join in for the next podcast. Thanks. Cheers.